Hello everybody and welcome back to Miss Well Informed. Today we're talking about credit scores. So I said I was going to go over how a credit score is important, what to do if you have a low or no credit score, and how to fix your credit card debt with using your credit score. So I would definitely listen to this entire video because not only am I going to go over each step of it, I'm going to explain why it's important. So credit is the ability to get what you want now and how likely you're going to pay it back later, which I didn't understand at first. So I thought credit cards were free money. I was $500 at Nordstrom Rack. I was going to Hard Summer 2016. I thought maybe I'll go to Coachella. I'm gonna have 17 different outfits, but your girl put herself in a big problem and couldn't get out. A credit score is from 300 to 850. We all would love to be right here. I was doing everything I was supposed to do, but there was no way for me to get into those 800s. Now, the ideal person isn't always in their 800s anyways. Once you're above 760, 740, it's all just bragging rights as it is. You only need 600 in order to get 100% payment assistance for down payment or closing costs. But was I going to get a good rate? Would they even have loaned me anything with all of that debt? No. There are 5 primary ways that they determine your credit. The first one is payment history. Let's say I went to that Nordstrom, I spent $500 that month. I decided I'm only gonna pay about $100 off. Now, 400 of that is going to have interest, but it's gonna take me 5.5 months, 6 months to pay it off because now I'm adding interest onto that $400. So don't pay it off right away, but at the end of the month when my bill comes, I'm saying, you know what, I'm gonna spend that $500 from my check and I'm going to pay it off. Second step is amount of debt owed. So I had $30,000 on my credit cards. Yeah, quite a bit of money. So the history of my credit was so long that it started plummeting my score. It's saying that you had 12 years of $30,000 in your cards, and that's not helping you. Next is new recent credit activity. Let's say you're going to buy a car. They will pull a hard inquiry. Same thing with buying a house. It's a hard inquiry. Some of them don't actually equip to a lot. Like when you're looking for a new home and the lender pulls out your credit history, it's only about 3 points on your credit, but it is a hard inquiry, and hard inquiries do lower your credit score. They stay on for longer. And lastly is the types of credit. Pulling a hard money loan and you're going to Dollar Loan Center, you're gonna be pulling something with a very high interest, and that will dock your score. Make sure you're looking at things that have good credit for you. Adding a good credit card that maybe gives you great points, maybe pays for plane tickets. Check to make sure you're not paying more than a certain percentage, and if you are, make sure that card is worth it. Another thing, the higher your score is, the lesser fees you have, the lesser the rate is because you're more reliable, and more money the bank will give you. So there are 5 C's that also have to do with credit, but also go along with lending. So something I learned while I was becoming a loan officer. First one is capacity. And capacity is the amount of money that's able to be lended. So for a house, a credit card, how much they think you're reliable in paying back. There's capital, and then there's collateral. What you buy with the money you don't have, with the money that's lended to you. And technically you own it, but you don't own it really until you pay that debt off. The conditions, so that's number 4. Conditions are, did I meet the requirements for the credit cards? Character, so your character, are you trustworthy? Have you followed the rules? Have you made sure that you're credible to the credit card companies? So that's what the 5 C's are. So you really want to make sure you think about that before you are looking on your Credit Karma and seeing what kind of credit cards that you're going to use for your balance transfer. We'll talk about that soon.